China has really come into the mainstream. So I don't know, not even sure why we're in this smaller room. We should be in the big room, right? China's gone mainstream. It's no longer in the fringes, no longer on the sidelines. Everybody's talking about it today, and I think with some good reasons. So I'd like to ask our experts here. We have these wonderful 3 China, Silicon Valley, cross-border VCs gathered here, and we would like to talk to them about what they see as the leading trends coming from China today and how it compares to what you're seeing in the West. So maybe we could talk about some of the advancements that we're seeing in China today that are really kind of rocking the world, that are very different, that are more advanced. So Chris, what are you seeing today in China that you think is leading edge?
Yeah, hi everybody. This is Chris from Sinovation Ventures. We're a pretty large early stage venture firm based in Beijing, Shanghai, Shenzhen, and with a small office and presence in the US too. A lot of people around us in the Bay Area, I'm not so sure really comprehend the size and scale and developments that are happening in China at the moment. And I just maybe would share a couple of macro trends that I think are pushing the Chinese market and the assimilation of advanced technologies in China much faster than in the US and the rest of the world. First and foremost, everybody understands how big the China market size is, but how does that translate in terms of assimilation of technology? This is a market that at the moment has close to 1 billion people that have smartphone devices using them for pretty much for every purpose in their daily lives, and about close to 700 million of them at the moment have mobile payments. And when I say mobile payments, I mean in my last 2 trips in Beijing, I could have left my wallet back here. So everything around you in China, every service, everything you want to buy, every payment that you want to make, you can just do it with your smartphone. This is an incredible development just in the last 2 years alone that has basically empowered all kinds of new services. But just imagine the amount of data this is creating from the point of view of assimilation of artificial intelligence. To give you a practical example from one of our portfolio companies called Yongqianbao, or Smart Finance in English, this is a company that is developing a personal credit score. So if you want to get like a $2,000 or $3,000 or $4,000 type of micro loan, that company has built an algorithm that is being provided to the banks so that you can apply on their app for that loan and get it with an instantaneous decision, and they compute your personal credit score just purely from the way that you are using your mobile phone on a daily basis. They have more than 1,000 data points or so that on how you're using your phone, what kind of news you're reading, what kind of content you are creating, how much time you're spending on it, but most importantly, what are all the financial transactions that you are doing with your phone now that your phone equals your wallet, and they compute a personal credit score for you, and then they let the bank know whether they should give you the money or not instantaneously. Of course, you as a user need to authorize that app to basically read everything that you're doing on your phone, and millions of people are already doing so. As a result, within their 4th year, they do a few billion renminbi monthly in loans, and this year alone, that company in year 4 is going to have close to $500 million in revenue because they charge a small commission from every loan that they are providing. Now, try to imagine that happening in the US, and you'd be very hard-pressed to see that, but it's empowered from the fact that mobile payments are ubiquitous and ever-present in every walk of life at the moment. There's 50x, the scale at the moment of mobile payments compared to the US. Another one is around artificial intelligence. There's a lot of talk and a lot of buzz around our AI, and a lot of it has substance. Some of it probably does not maybe for the short term. But China has a tremendous edge when it comes to AI. First of all, because of the size of the market, because of the availability of all this data, but also because of tremendous government top-down push in terms of assimilation of these technologies. To give you another practical example, we backed a self-driving truck company in China. There's already a couple of provincial governments that are basically saying to that team, please do come here in Shandong province, and whenever you're ready to test your trucks, all our roads are actually available for you to come and and test your trucks. Over here, the trucking unions have already gotten preliminary injunction in Congress to block self-driving technologies from use in trucking, right? And there's a lot of other examples, but
those are two great examples.
Right.
Really great.
So AI assimilation and top-down push in combination with computing power, availability of data, and tremendous amount of capital that China has thrown into this new segment of technologies. The largest unified market in the world. You put these things two together, and China is racing ahead.
China's racing ahead. Phil, do you agree? And what are you seeing on the landscape?
Yeah, I would just very high level touch on 3 points here. I'm Phil from Horizons. Horizons Ventures is based in Hong Kong. I guess the three things I would say, the first is I myself, I focus on a lot of deep tech, deep science sort of investments. And what I've seen, what's been different, I mean, I've been 15 years here in the Valley and only maybe 5 years in China, Hong Kong, Taiwan. And what I've seen is I still see the deep tech and the deep science being done here, being done in Boston, being done here in New York, being done here in the Valley. Even when Kai-Fu talks about, most of the AI papers are written by Chinese or will be very soon. These are Chinese nationals that are working here in Stanford or working at Berkeley or Princeton, things of that nature. But what's interesting, but on the flip side in China, you see, and we were just talking about this back there, is there's a lot more experimentation on new business models. I mean, very few people know this, but a company, not in China, but in Taiwan called KKBox, they started subscription music service 3 years before Spotify, right? And in China, you can see so many of these examples of experimenting with so many types of different business models. And that just goes to my second point where, when the type of innovation you see in China is a lot of times, optimization of business models, I guess what you would call, not the 0 to 1 innovation, but to 1 and beyond kind of innovation. And you see that a lot. The third thing is just that I just thought of because I heard of what you were saying about autonomous driving, and it's just a high level sort of view is, in the States, you have too many lawyers. In China, you have too little lawyers. And that dynamic allows for, is the context that's set for anything from autonomous driving to collecting data to sort of experimenting on the genome and the DNA. I think that that itself sort of sets the stage for what type of innovation you can see in China.
Okay, thank you. Edith?
Okay, my turn. So like a couple months ago, I wrote a long report because when I have nothing to do, I just like to do research. So for those of you who haven't...
She hides out in her room like I do when I go overseas, hiding out in her room doing research and creating content.
Oh, we close door, we play mahjong. But anyway, so I just want you guys to know that people in China think right now, we means people who are in Silicon Valley is quite behind. And Chris mentioned, China is already cashless society. And China is #1 in terms of shopping, online shopping, e-commerce, mobile games. I almost want to say crypto until September, but I think it's going to come back and turn around soon. Education is #1. There's like numerous, at least like 10 or 15 trends that China is #1 in terms of dollar invested, and on top of just sheer volume of startup and just amazing. But there's a few trends I'm particularly really excited about. Just to start, since my friend Richard from Udemy is sitting right here, we've been talking about education in China. And if you think about just even graduate alone, for university graduate, just that amount is already more than Europe and US graduate combined, right? And for those of you who have any Asian friends, you know, like most of the Chinese or Asian parents would rather spend at least 50% of the household income for their kids' education. Even they would rather not eat to make sure that their kids have good education. So there's a lot of money, particularly for education, which I think is very interesting because many, so New Oriental or TAO, to public literacy company, education company, they also come here actively looking at content, education content related companies to bring back to China. So I think there's a lot of really interesting cross-border opportunities. Many of you know that Bonnie and I have been really into crypto and blockchain. There's one company I'm very excited about called Nabulus. And these guys, actually founder of Neo, for those of you into crypto, you probably know Neo is traded more than 2 billion now. And head of blockchain from Ant Financial left and now working on blockchain search. And from day one, they wanted to be international. The whole team is in Beijing, but they wanted to create an international brand because, well, obviously, for obvious reason.
Yeah, and now they really want to create an international brand that China has put a ban on crypto.
Yeah, very, very
So-
exciting time.
So
But we'll
yeah,
start with that.
so yeah, I wanted to bring that up about the crypto ban and the impact on this really exciting new field. Is China going to lose out on this now, and Silicon Valley going to leap ahead?
I don't. Well, so just for in terms of timeline, right? Before September 4th, obviously you notice I've been spending a lot of time. They shut down all ICO platform in China. On September 11th, they sort of stopped all exchanges. Having said that, right now a lot of these exchanges, Huobi and Allcoins, a lot of these are still up and running. In fact, they're listing foreign token. So that's why everybody need to be international to start. And even though they shut down a lot of things, by the way, there's no law. They just government say, we advise you to shut down, so everything is gone.
Of course they do then.
But a company like Bitmain, which I know you guys invested, they didn't shut that down. One of the biggest Bitcoin mining companies in the world.
Well, they provide the hardware, right? And their clients are not just Chinese. They provide their mining hardware to everyone around the world who wants it.
So this is my own prediction. 2018, China will hopefully beat the Korean, will be #1 Bitcoin country again. More or less, it's just Chinese people just like to gamble and trade. They're not going to let other people to be #1, and just a matter of figuring out how rules and regulations so that they can have more control. But it'll come back.
Control is really important, like on the bike sharing thing too. Is one of those areas that it's been a problematic area in China with a new business model that's gotten a little out of control with so many people doing bike sharing that and tossing bikes, you know, on everywhere, every which way. It's become an issue in China. So you do have these kind of pushbacks as well. And of course, censorship is still one of these huge issues in China. You know, I actually would be interested in your view on how that might impact China tech and innovation going forward, or is it a non-issue? The whole sense, I mean, because we're here in Silicon Valley, you know, we got Google, everybody, it's all open. You go to China, it's all closed. So what kind of impact is this going to have longer term? And is it going to open up?
It's a pretty sensitive topic. I think the media in this part of the world always makes a lot more out of it than is the reality on the ground in China. And I lived in Beijing for 7 years, and I was going back and forth another 3 before that, so a good 10 years. You know, I never. It's not a topic on the day-to-day life for the average citizen. Everybody understands the situation. Every startup company that is involved in user-generated content or is on the consumer side knows what they need to do and how to comply from the beginning. and they put everything that is necessary to be installed in place. And as they are growing, they're obviously paying more and more attention to that. Maybe one impact is the fact that the government obviously is in very. Some of these Chinese companies have grown extremely big right now. Baidu, Alibaba, Tencent are obviously within the 10 largest technology companies in the world. They've already reached their US equivalents and are surpassing them at a pretty fast pace. And in some respects, it's only still the tip of the iceberg. So tremendous faith and trust is being placed, I think, from the government in these companies. And there is a interdependent relationship there probably formed. And once another startup grows to a stage that's becoming noticeable on the day-to-day life, they also need to build that kind of trust relationship with the authorities. So that is one way of putting it. But the bike sharing, for example, photos here that everybody was laughing and kind of became like a little internet joke on Twitter and on Facebook and in other media streams is really a little bit of a random story, because that actually industry is extremely big right now in China, and there's at least 2 multi-billion-dollar companies with very sound business model, and people are wrong to see them as bike-sharing companies. They're actually consumer fintech companies, and they're using bike sharing as the foray towards getting a user's data with at least 2 or 3 transactions a day and all the payment information uploaded. And just like Uber has started launching, credit cards, even Uber is not really a transportation company. Eventually, they want to become a consumer fintech company in the US too. And in a very similar way, I think Mobike and Ofo in China, when you have, 20 million transactions, a day, which may be rides at the moment, but they are paid services. And you have that user engagement on a daily basis. There's a whole range of services you can offer on top of that, and that I think is a very big issue. But on bike sharing specifically, just to wrap it up, these are models that are very difficult to imagine in the US because this country doesn't have public transportation. But in China and in other parts of the world, where at least for the core city centers, there's pretty good, public transportation. That from A to B, and vice versa type of daily commute, if the majority of that can be covered by public transportation and you have the little bit of a bicycle in the way that these companies are operating up front and towards the end of the trip, totally makes sense as a model. And they were being built on the basis, on the fact that actually Uber, Didi, and all the car sharing companies for the city centers have actually created a lot more trouble than solving it. And hence, the very rapid ascendancy of these companies in China. But they are not transportation companies, okay? They are consumer fintech companies. It's a very different mentality.
So I don't think we can talk about China without talking about WeChat. And how many people here are on WeChat already? Everybody in the room, right?
Awesome.
That's an example of how a China model has gone mainstream very quickly. And so do you think, looking at that, WeChat, and looking at Baidu, Alibaba, and Tencent and their impact in the US, do you think that these companies are going to continue strong in the US? What kind of impact are they going to have on the US market?
I'm a little torn here because I haven't seen Tencent, Alibaba, or Baidu being very aggressive outside of China yet. I feel like there's this, and I say this as being Chinese, is because I feel like there's this sense in which none of them want to take that first step because none of them want to be that first one to fail. And, kind of the first mover disadvantage there's that psychology behind that. And I don't see that they're kind of like, watching Tencent's watching Alibaba, what they're doing, or are they going to do anything in the US? If not, then we should sit back and watch as well. And so they do very much see each other as, rivals and enemies. But I don't think they have, a well thought through strategy of how to, spread WeChat.
Okay, I want to get to venture capital too. So, and we only have 30 minutes, but go ahead, Edith. What were you going to say?
well, I sort of disagree because, well, other than, so, by the way, in addition to the BAT these days, there's also TMD, not Tamada, but, you know, Total, Meituan, and Didi. And these are giant, huge internet companies. But what I wanted to say earlier is, I think that more or less because I have conversation with the Ali folks and also from Tencent, they actually, to me, they're very, particularly Tencent, very, very thoughtful about their investment strategy. I think they know that they can't, like, because when you're a B2C company, it's just so difficult to do it overseas. It's very, very hard. The vice versa is the same thing too. So in the US, they bought Riot Games, and I think, you know, sort of leave them alone, and they do amazingly well. In Helsinki, Supercell, right? Huge billion-dollar acquisition. I think that, this is my guess, obviously I can't speak on behalf of them, but they're definitely very thoughtful about, they want to invest or acquire so they, you know, bread and butter, which is gaming, and they understand. And I think they're number one in the world in terms of operating games, and invest and acquire like business that they understand. And then around the WeChat, if you can imagine, is obviously payment related, but probably not as much as in the US, but more, my guess would be Southeast Asia. As the behavior of consumers so much more alike between Southeast Asia and China rather than China and US.
That's true.
Yeah.
True. Okay, let's switch topics because probably a lot of people here want to talk about venture capital, right? So let's talk about venture capital. And we have two funds here that are based in China that are actually investing in the US. And I'd like to get a perspective on what that's like as a China fund investing in the US. And Edith, you can chime in too. So yeah, China to the US, and then we can talk about US to China. Is it more difficult for a China fund to get into the really top level US companies here? Or is it easier because they want to, it's an access way to get into the China market if you have a China venture capital fund behind you? What are the dynamics?
I think from Horizon's point of view, I would say it's easier. Yeah.
Because Li Ka-shing, everybody knows that, right?
Everybody knows that.
brand.
It's a trusted brand. It's, you know, it's Hong Kong, and it has a track record of sort of and yeah, I think that China, and especially right now, there's that whole China angle that gets them much more excited. So yeah, I would say it's actually easier to get into, but easier in the sense of, well, following would be a lot easier. To lead, that would be a lot more competitive.
Okay.
Yeah, to lead deals.
Okay. Chris?
Yeah, we are here as a Chinese firm for some of the reasons that I think goes back to what Phil said before. There is still deep tech and frontier tech startups here that we don't yet see in China, and you can have a mentality of waiting and not touching some of these sectors or some of these very interesting technologies. Or you can put a little bit of money to work outside of your comfort zone as a learning and participation exercise, because all of these things are going to go to China too eventually, and I actually think that gap is closing very fast also, because you go back to your earlier point, while a lot of 10, 15 years in Silicon Valley, Chinese AI PhDs or computer science, very well established and senior by now, engineers and research scientists. Indeed, they have their families here. They're used to the lifestyle in the U.S. Despite the very lucrative and increasingly lucrative opportunities that they have to go back home, they're still, kind of reluctant after, 10 or 15 years of getting used, to work here. But from our experience talking to a lot of the PhDs that are just graduated or about to graduate from the top tier universities in the US that are Chinese, the vast majority of them are getting ready to go back. So that gap is going to close down in the next 5 or 6 years. In the top tier talent pool gap is going to close very fast. So part of our role over here as a Chinese VC firm is to invest in deep tech and frontier tech, things that are still not seen in China. Hence, our focus in investing in robotics here, commercial and industrial robotics. But everything has tremendous market applications in China, and actually more interesting and more immediate market applications in China than they do here. You see a company out of Montreal, for example, that's called Element AI. They just raised $100+ million with the participation of Tencent, the GIC, the Sovereign Wealth Fund of Singapore, and they're top tier. They're trying to disrupt IBM, Watson, and Palantir in the AI service front. They spend half of their time already, trying to deploy their technologies in China rather than in the US or in Canada, because they've understood that they have a lot more opportunities in the marketplace, more immediate opportunities and bigger opportunities in the marketplace over there. So we want to invest in portfolio companies here that we can help them do that kind of bridge. We've never had in the 4 years that I've been here any problem getting allocation as a Chinese investor in U.S. deals. But of course, just like Phil said, it's a little bit different if you want to be the big check or the leading check, and much easier if you're just a co-investor in a long list of investors. But I also think we need to define Chinese money very carefully, because there's like 100+ different sources of Chinese capital in the Bay Area right now, and some of it is government related. Some of it is Chinese corporate related. Some of it are private funds like we are. Some of it is angel investors. Some have presence here, some do not. For us, for example, our US dollar funds are almost 100% non-Chinese money. So we may be Sinovation Ventures, we may be investing in China, we may be a team of Chinese managers, except for myself, but actually 100% of our US dollar capital is US, Europe, or Asia, ex-China. So we may have a Chinese label, but actually it is the same money that invests in any other Silicon Valley VC in terms of institutional LPs, right?
Sure. How many deals, over that 4-year time span, how many deals has Sinovation Ventures done in the US?
We've done 43, which
43.
sounds like a very large number, but that's because our first 25 or so in year 1 and year 2 were mostly pre-Series A seed deals, which are different and easier type of decisions and much smaller ticket sizes. So if you were to tell me what we have done from Series A onwards, it's closer to 20.
Okay. And Phil, from Horizon Ventures, how many deals in the US?
Wow. I would say globally 80. US would be 30% of that. Yeah, 35.
Okay, 30 to 35, 1/3 of your deals are in the US. Okay, all right. So Edith, from your perspective, you're a US fund, well, actually 500 Startups is really global, right? So how do you look at China, and what is your view of how 500 Startups can help startups out here get into the China market?
To start, before talking about us, I just wanted to quickly talk about these two guys. Their fund are amazing. Like, just don't talk about it. Horizon Venture invested in Facebook and Waze, and Chris's Sinovation have like 7 unicorn at the moment. It's crazy, but they're very, very humble. So I think compared to 500 Startup, which is, we are almost 400 million AUM now, and done about 35 investment in Greater China, which include mainland Hong Kong and Taiwan. We have Bonnie and Jackie, which is at the back from Taiwan representing, and I think Stella somewhere, our Hangzhou representative. And we don't do enough. And I think like our position for 500 Startup is we definitely, for the Chinese companies, we are actually a much stronger US brand. So regardless of what I mentioned with Nebula's, Agora, which is the former CTO of YY, now want to build video streaming as a service, like our role is actually help them to bring to the US. I think we found amazing entrepreneur in China now. Is no longer like no more copy from the US. It's actually I think Facebook is copying WeChat, bluntly.
Yeah.
And
yeah, this is one of those big overarching trends of from copying to now innovating.
On the reverse, I think it's much harder for a US company to go to China. And I think if it's too early stage, which most of our portfolio, 1,800 companies, majority of them just should not even bother. I think it's too difficult. If you have a strong footing, let's say at least maybe after B, maybe even C, then you have substantial revenue, you actually have a dedicated product and biz staff and marketing team, then maybe for China.
Yeah, no, but there's been a whole series of failures of American companies in China, the large ones, and not even mentioning all the small ones that have tried. So just one last topic, and we have very little time left, but on the valuation side and competition, how do China and the U.S. compare for startup financing? Valuations, getting in, competition, getting in to these deals. What are you seeing? Just very quickly down the line.
I think the two ecosystems are converging and have a lot of similarities. They're extremely competitive. China early stage is extremely competitive at the moment. And to answer your question, you have to look, I think, sector specific. So the hottest sectors, like the ascendancy of reemergence of all the artificial intelligence technologies right now, has created an extremely frothy, bubbly environment, because also the talent pool, the top tier talent pool around this type of technology is extremely limited at the moment. So everybody's chasing just a handful of people, and whatever it is that they are doing, everybody is like jumping in. But the size of the market and how real that opportunity is, you would hope that in due time will eventually even things out, which is maybe not necessarily the case here or in other parts of the world.
I'd like to comment just on the previous question. Is this obviously everybody in this room knows this term, software eats the world, but it needs to add, except for China, because like Edith was saying, there's this great firewall of China that you just can't penetrate. But on valuation side, so just an example, of course, two companies, a company called SenseTime and a company called Face++. I would say they're probably the two most well-funded AI companies in the world now. And of course, this talent is scarce, but these two companies are really fighting for all the best of AI talent. But that just goes to show that, in terms of fundraising and valuation, as an independent AI company, the company that has raised the most money is in China.
So I feel like most of the Chinese investors, when they come to the Valley, is like, people who used to go shopping in Neiman Marcus, but they go to Walmart and they see all their deals in the U.S. is so cheap. And on average, there's actually on CB Insight have a comparison of first round investment, first round in Silicon Valley, on average about 700K. In China, first round investment is 1.3 million. And then it just keep going up. So average sort of the investment round size is at least 50 to 200% higher in China than in Silicon Valley. So you can imagine, just in terms of valuation and everything else, I think, and for good reason, because end of 2015, $231 billion of government-backed VC were created. About 200-300 of these government-backed VCs. There's a lot of money chasing few little deals.
And now, if you count the RMB funds from China, the China VC market equals the size of the U.S. market in terms of VC
probably
investment.
Bigger, but the statistics coming out of China in terms of that are probably not as
you don't believe it?
Dependable. No, I actually think they underestimate the amount of renminbi capital that's been thrown in the market.
Right.
But one very big clarification on that side is renminbi funds are on average 5+1+1 years, so extremely short in terms of duration compared to the 10+1+1, whatever it is, on the US dollar side. And this is a tremendous natural segregation in terms of the outlook of companies that you invest with renminbi currency, plus to publicly list in China at the moment, which is the traditional exit route for renminbi funds, you have to have at least 3 consecutive years of profitability. That's very different from the public markets outside of China. So renminbi funds focus on companies that are very rapidly growing in revenue, have profitable operations already, and short-term horizon to exit. So deep tech companies, by definition, cannot go
They,
into
they,
the
wou- they
renminbi
wouldn't be
funds.
in that category. Okay, we're getting the signal here. I would love to talk to them about what specific sectors they're investing in, but you can talk to them on your own and ask them about that. So thank you very much. Thank you, panelists.
Thanks, Rebecca.